Okay, so the other day we talk about the primary functions of a bank, right? We have already covered one of the function of the bank, which is to accept deposit. So you can deposit money into the bank in three ways. Okay, you can do it in the form of a saving account, FD, or we call a fixed deposit account, or a current account, okay, whereby you can issue the check. Okay, so this is one of the function of the bank to accept the deposit. Okay, and today we'll move on to the other functions of the bank. So what are the other functions? Can you have a think first? What are the other functions of a bank? Mm-hmm. Okay, so have a think. Okay, so you may pause the video first and then you have a think first and then continue on. Okay, so let's have a look at other function of the bank. Okay, so number two, the bank can lend you the money. Okay, lending of funds. Okay, funds over here it refers to the money. Okay, so the bank can lend you money. There are two ways the bank can lend you the money. Number one is through the bank overdraft, or number two is the bank loan. Okay, so bank overdraft is a facility offered for the current account holder only. A current account, if you can still remember, is the account normally opened by the businessman because they want to be able to issue the check. So they open up the current account, so a current account can issue check. Okay, at the same time they will also have the bank overdraft facility being offered to them. So what is a bank overdraft? Okay, a bank overdraft is when more money can be withdrawn than actually has in the account, but the overdrawn amount you will be charged interest. Okay, you will be charged an interest on the amount you have overdrawn. Okay, and this must be repaid in full when the agreed period is up. Okay, for example, they give you a deadline, you have to pay in 1 month. Okay, so what it means, for example, your current account you have 10,000 example. Okay, but if you have this bank overdraft facility, so if you withdraw the money or if you issue a check 10,500, okay, you are still able to do so. Okay, so a bank overdraft meaning to say you withdraw. Okay, you overdraw more than you actually has in your bank account, in your current account. Okay, but this overdraw amount 500, you have to you will be charged an interest. Okay, a certain percentage of interest on this overdraw amount. Okay, so this is known as bank overdraft. Okay, drawing out more than you currently have in the bank account. Okay, and this is being offered to the current account holder only. Okay, next, number two, bank loan. Okay, you can borrow money from the bank. Okay, or we say that the bank loan you the money. Okay, there are three ways, three different types of bank loan. Number one, personal loan. Number two, business loan or mortgage. Okay, so loan, you can think of loan as you loan the bank loan you the money, meaning to say you borrow the money from the bank. Okay, you borrow a sum of money from the bank, it's called the bank loan. Okay, so the loan by the bank can be either of these three. Okay, so normally as you can see from the name, personal loan, so this loan will be taken up for personal use. Okay, for example, buying of car, repair the house, and improvement or renovation of the house, and so on. Okay, so this loan you borrow the money from the bank. Okay, for personal use. Business loan is normally borrow money from the bank for business use. For example, a business they want to buy a new buildings, or they want to buy a new equipment, or they need additional capital for their business purpose. Okay, then they will take up the business loan. Okay, and last one, mortgages. Okay, are being offered by the bank to customers who wish to borrow money to buy their house. Okay, so then this one will be referred to as the mortgage. Okay, so these are the three types of loan available for the customer. Okay, now let's take a look at the difference between the bank overdraft and the bank loan. Okay, so now as we have already mentioned just now, a bank overdraft is when you temporarily withdraw more than you have in your account, right? Than you have in your account, right? So As you can see, a bank overdraft is normally taken for a short period, whereas a bank loan is for a long period, okay? So a bank loan could be for a number of years, maybe like 10 years, okay? 5 years, 10 years, okay? It will be for a longer period of time, okay? For the bank overdraft, the rate of interest is higher because it's only for a short period, okay, on the amount overdrawn. Whereas for the bank loan, the interest is normally lower, okay, because it has to be paid over a long period. Bank overdraft, the interest is charged daily on the outstanding or overdrawn amount. Whereas this one, bank loan, the interest is charged per annum. Per annum means per year, okay, on the entire amount of loan, okay. So for example, like using the example just now, okay, you have overdrawn 500 more than you have in the account. So the interest charge will be on the 500, okay, overdrawn, and this one will be charged daily. That's why it's very high. Whereas for this one, bank loan, say for example, you borrow a loan from the bank of 10,000, so the interest will be charged based on this 10,000 amount, and is charged yearly, okay? It will be charged yearly. For bank overdraft, the borrower must be a holder of the current account, as we have already mentioned just now. And for the bank loan, you need not be a customer as long as you provide some sort of security, okay, for borrowing the money, some sort of security, maybe like your house, your car, okay, some sort of security, okay, provided to the bank, okay. So these are the functions of the bank, okay, in terms of borrowing customer the money, okay, bank loan and bank overdraft. And now let's move on to the cash dispenser. This one is like what you always known as what you are familiar with. We call it the ATM machine, okay. ATM machine, okay. Cash dispenser are actually the ATM machine. ATM means automated teller machine. So they are automatic machine found, it could be inside or outside the bank, and or maybe in supermarket or office, okay. They are used to allow the customer to withdraw the cash by means of cash card. So cash card over here we mean the ATM card. So we mean the ATM card. So you have to key in the password, your PIN, okay, a 6-number PIN, and then put in your ATM card, key in the PIN, then you can withdraw the money, okay. Next, safe deposit, okay. If you have for example precious things to put, for example important documents, or even like your gold, jewelry and so on, you do not feel it safe to put it at your house, so you can put it in the bank safe deposit, okay. So the bank offer the safe deposit for keeping the document and valuables, okay, like I say jewelry and all that, in the strong rooms of the bank, okay. So to this one, okay, so it will look something like this. You will have a slot over here you rent from the bank, okay, and then you pay money. So to operate this safe deposit box, 2 keys will be needed. One is kept by the customer and one will be by the bank, okay. So in order so if you want to put in your documents or your valuables in your safe deposit box, you go to the bank, okay, after you open the facility. In order to put it in, you will be given a key, so you have to put in your key to open it, and the bank, the bank personnel, they will also have to put in their key. So 2 keys will be needed in order to open the safe deposit box. That's why this one is very secure, okay. So for this facility, you have to pay a certain amount, okay, of money to rent the safe deposit box, okay. Next, night safe facility is somewhat like the safe deposit, okay, but this one is specifically targeted at the night, okay, when you want to save the money at night. So some businessmen, they receive a lot of money, but they're not able to take it to the bank because at night it's closed, okay. So what they can do, the bank, they open up a night safe facility with the bank, so the bank will provide the businessman with a special bag to put the money and a key to open the metal door outside the bank, okay. where the bank of the money is dropped out. Okay, so even if the bank is already closed for the day, you have the key, you still can open up the metal door of the bank, and then you just drop the bag of money into the bank. Okay, into the bank. Okay, so then the next day they will take it and deposit it to your account for you. So credit card, so as the name credit, so this card is a credit card allows you to make purchase on credit. Okay, on credit. Nowadays, some business that offer you the debit card and the credit card. So a debit card is when, because so do not confuse a debit card or a credit card. Okay, some banks they combine, just like I think by Jewelry or BIBD. Okay, they normally combine the ATM with the debit card already. Okay, so this ATM you can use it to withdraw money from your account, or the debit card also, you if you use it to go shopping, like the Hua, you give the debit card to the counter, and then they will minus the money directly from your account. Okay, however, a credit card is a little bit different, because a credit card means that you are making the purchase on credit. Okay, it does not deduct the money from your account. Okay, instead you are making the purchase on credit, meaning to say at the end of the month you have to transfer money to the bank to settle your bills. Okay, that's why you buy on credit first. Okay, and then at the end of the month you have to transfer the money to settle your credit card bills. Okay, unless you have the standing instruction where you instruct the bank to pay the bills monthly. Otherwise you have to manually make payment, okay, to the bank for using the credit card to make the purchase. Okay, so at the end of the month you will be billed and you have to pay the bill. Okay, for example, I spent 1,000 or using my credit card, so at the end of the month I have to pay 1,000. Okay, if you do not pay on time, then the interest will be charged. Okay, and lastly, the traveler's check. Okay, as you can see, check for the traveler. Okay, so this traveler check can be used by customer of the bank who travel overseas frequently. Okay, so you can buy the traveler check in a set amount. So if you want to make payment, when you go overseas you want to make payment, you can give the traveler check to the counter, and you have to sign your name at the bottom. Okay. Okay, other functions of the banks are, for example, like they provide the debit card. Okay, the debit card we have already mentioned earlier on. Okay, it's a payment card that can be used to make payment instead of using cash. Okay, you can use it to make purchase. Previously we talked about credit card, whereby you are making a purchase on credit. Okay, and this debit card is when you are using the card. Okay, the money is automatically deducted from your account. Okay, it's transferred directly from your account to the merchant account. I mean, to for example, if you make a purchase at Hua, it will automatically deduct from your account and transfer to the seller account to pay for the purchase. Okay, so that there is a difference lah. Okay, credit card is purchased on credit, whereas this one is directly deducted from your account, the money. Okay, check is a written order to pay in which you sign and you give to another party as payment. Okay, so for example, we always mention issue check. Okay, so when you issue check to make payment, okay, you are actually giving an order for the bank to make the payment to the person. Okay, so the person, when you issue the check to him, the person will present the check at the bank for payment. Okay, so you are instructing the company, the bank, to give money from your account to that person. Okay, now money remittance. Okay, remit means to send the money. Okay, so a customer can remit money to the other banks also outside the country. Okay, for example to a Malaysia bank or US bank and so on. Okay, so this is another function of the bank. Okay, to remit the money overseas. Now, a bank also provide the standing instruction. Okay, so what is a standing instruction? A standing instruction is a instruction you give to the bank to pay a set amount of money at regular interval to another account. Okay, for example, just like you have a credit card. Okay, and then monthly you will incur, if you use the credit card monthly, you will incur you have to pay back the amount. Okay, so you can set up a standing instruction. Okay, and ask the bank to deduct the money automatically from your account. Or for example, you have an insurance. Okay, you have to pay money like $100 per month for your insurance, so you can set up a standing instruction with the bank, and then the bank will automatically deduct 100 every month from your account and transfer it to the insurance company account. Okay, so this is called standing instruction. Okay, instruction given by bank to transfer a set amount of money from your account at regular intervals. Okay, internet banking. Internet banking. So you see here, internet banking. Okay, it's also online banking or e-banking or known as virtual banking. So it's an electronic payment which enable the customer to conduct a range of financial transaction through the website. Okay, so meaning to say basically you log in to the bank website, and then you can do a variety transaction. For example, like you can set up a transfer the money online, or you can set up the transfer of money overseas and so on. Okay,